Today is Thursday, the 6th of April. It's around about 11 a.m. Now, I thought I'd pick up the camera today and film another day in the life because I've not been on YouTube in probably over a month, and I've not done a day in the life in probably 2 months. In fact, I think the last day in the life I done was back when we were in London in November when I spoke on the prop trading panel at the Financial Magnets London Summit. So it's been a little while since I've checked in with you guys. I have a lot of updates, a lot of exciting stuff's been going on at KB and that kind of thing. So I thought I should probably pick up the camera. Now, I've just dropped Neve off at work. I'm currently charging my car. I've had like a coffee and I'm also doing a little bit of catching up on some reading as well and some messages and that kind of thing. So I'm currently in 2 trades. This morning I was filled long on dollar Swiss and short on pound yen. So with all that being said, I'm going to get wrapped up here and head home to jump back onto the charts. Welcome to another episode of Day in the Life. So before diving straight into the technicals and the analysis, it's worth pointing out that the strategy that we're talking about here is a strategy that has been tested extensively, not only in the assets that I'm currently trading this setup in, but this has been extensively tested in pretty much 30 different assets. I have played about a lot with different entries, different ratios and that kind of thing to really drill this down and get this as mechanical as possible. I'm a big believer, and it's something we teach at KB, that you should trade multiple trading strategies. Trading one strategy means that you don't have very much diversification, and it leaves you susceptible to changes in market conditions. If you're trading a strategy that's dependent on a certain macroeconomic niche or certain macroeconomic conditions, you may not be aware of that. It may be a technical strategy, but it may perform very well under certain macroeconomic conditions. If you're only trading one strategy, when there is a macro shift, which happens, relatively regularly, the markets do go in and out of cycles. But when that happens, you are more likely to go through a break-even or even a drawdown period, right? Because your strategy is, you're only trading one strategy. Now, if you have a portfolio of strategies, say 2 or 3 strategies that are not necessarily correlated with one another, so whilst one is performing well, the other is, maybe not performing at all, or when one is performing poorly, the other one is break-even, etc., etc. So that could be, you could have a continuation, a very directional strategy, and then a reversal strategy. And if you're trading both of those strategies and systems at the same time, you are much less likely to go through exceptionally poor periods, especially if there's very little correlation, because you have diversification there. So not only do we teach strategy diversification, but we also teach a statistical data-based trading approach. So that means we trade technicals, but the technicals we trade, how we trade them, why we trade them, when we trade them, is all completely anchored on a statistical framework that we have developed using Excel and using historical data to work out exactly what makes these strategies tick and how to approach it in the most efficient, the most optimized, and the most mechanical manner. Now, it's worth quickly mentioning here that all of these principles and this approach we teach in our price action concepts course. I'll leave a link to that in the description. Now, one of those course members by the name of Marty, using these exact principles and the stuff we teach in the course, just recently put through an $8,500 FTMO withdrawal. Starting off Q2 of 2023, he's already withdrawn $8,500 from FTMO using these principles. So quick shout out to Marty. So the two assets that we're talking about here are pound yen and dollar Swiss. I can see pound yen and dollar Swiss between the two of them over 2016, 17 and 18 made 15R, 29 trades, so about half an hour per trade average, which is actually very, very high. May not sound high, but that is very, very high. And then we can see pound yen here and dollar Swiss here over the following 3 years, which was 2019, 20 and 21. And we can see over that period, they didn't do so well. They made a total of 7R over the 3 years, and the number of trades was 42. So much less efficient in the last 3 years, but in the first 3 years, very, very efficient. Overall, still a very efficient strategy. You're looking at about 22R over a 6-year period, over around about 70 trades. So that's still around about 0.3R per trade, which is very, very good. That's, again, it doesn't sound high, but 0.3R per trade is very, very good. Just think about this. If you take, for example, 200 trades in a year and you average 0.3R on every single one of those trades, you're going to make 60R for the year. In this age of, all the nonsense that you see on social media, you might think 60R is not a lot. On 2% risk, which is what we advise and what we teach our students, that's 120%. So moving on to the charts here. Here we have our dollar Swiss. Dollar Swiss here from the daily time frame. I'm seeing. I will talk through some of the context and some of the analysis that you guys might be looking at, the types of things you might be seeing here, but very little of this actually factors into my trading. I see a pattern and I execute on that pattern pretty much. You see these little orange arrows that are appearing. This is an indicator that a KB member has developed for our strategy. So this indicates to me that this is a daily hammer candle. The approach that I tend to go for, and again, to talk you through some analysis here, basically what's happened is the market has flushed down through these lows and the buyers have stepped in. The sellers have tried to take it short through those lows. The buyers have ultimately regained control of the market. I would expect a drive higher from here, and the typical area I would be looking to target would just be the next point at which the trend would change. So we're in a downtrend here. I'm not looking to try and trade this off into an uptrend. I would simply be looking to take it to the point at which this downtrend will be challenged. If the market breaks this level in here, we will be breaking off into an uptrend. I'm not predicting that we will actually make a new trend direction, but I will simply take it to that point and no further. If it reverses, it reverses. I'll already be out. Now, the approach from the 60-minute is simply to look for downside structure, and you can see we got our entry right in here on that little bit of structure there. And effectively what I'm now looking for, again, stops under the bias itself. If the price takes that, I would deem this, this setup to have failed. So at the moment, that's what we're looking for. I will be looking to trail stops if we can get a significant break through some of this structure here, especially, since we do have these points of structure just above market. I would say once we get above those, we're pretty much clear until we start getting into some of these structure highs up here. Now, moving on to pound yen. Pretty much the inverse setup, but we're looking for the short here rather than the long as we were on dollar Swiss. Again, price is taken out that high. It's given us that nice bias candle that we look for, the shooting star or the inverted hammer. And then we had a nice daily breakdown in the following day's candle, indicating that the market's ready to sell off. And again, I just want to take it down into those kind of lows just at the bottom of this range, again, where there would be a trend change. At the moment, the market's trading in there, no change in trend. Once we break down through there, there is. Therefore, that becomes my target. Nice and simple. Again, looking at this down on the 60-minute time frame here, what we saw was the market, after it formed this bias candle, quietly trade sideways, and then after seeing a significant break to the downside and a break of some of this structure, all I'm looking for is the retest into that structure to hit it short, which is what we've done. Some of this structure up here protecting the stop, and again, just looking for that move to the downside. Some problem areas that we could see on the downside would be these highs in here. But of course, once the market gets past that, I do think we're clear pretty much to target. So that's what I'm looking at there. So with the analysis wrapped up, let's get on to some life updates since the last day in the life video went out. So since I last filmed a day in the life, as I'm pretty sure you can tell, I'm no longer in the office on Buchanan Street. I do still have the office on Buchanan Street. However, in 2023, I've been trading exclusively from home. And if you hadn't seen, a couple of videos ago, I actually done a full walkthrough of my home office setup. And I'm not gonna lie, I am actually really enjoying trading from home. Some of the benefits that I'm noticing is that I never had a full setup at home. I always kept my full setup in the office, and my home setup was just like a couple of monitors and a laptop. So one of the benefits I am noticing is if I need to get up in the middle of the night or very early morning to manage trades or to do analysis and that kind of thing, that aspect of things is much, much easier because I have my full setup here. And it's super accessible. Obviously, another benefit is I'm not having to travel to get to work in the morning. With traffic and stuff like that to get into the office, some mornings it could take 40 minutes or even an hour just to get to the office, and the same for coming home, which is a little bit of, it's not the worst. I'm aware people in London, some of you guys, you travel for 2 hours to get to work or uni or whatever, but I am enjoying that aspect of it. It does free up time for me to spend with Neve because you're not just traveling all the time. You've got effectively at minimum an hour, at maximum an extra 2 hours every single day. So that's really awesome as well. Some of the setbacks I have noticed is there can be a tendency in the morning, especially if you're tired, not to be as urgent about getting up and getting ready and getting to my desk. When you have a 40-minute commute ahead of you and you've got positions, you've got risk in the markets, you literally leap out of bed and you sprint around everything in your morning to get to work, to get down at your desk because you've got risk in the markets. Since my office is across the hall from myself and Neve's bedroom, there's not really much urgency some mornings, and that is a little bit of a drawback. But all in all, motivation and stuff like that, definitely still there. I have to say though, I think into 2024, I will probably look to move back into an office. Once you're used to something, once you're used to being in an environment surrounded by other traders and that kind of thing, it is really, really hard to break that. Now, it's not had a negative effect on my results. In fact, my results in 2023 have been pretty good. On funded firms alone, I've withdrawn somewhere between $15,000 and $20,000. I'll put it up on screen somewhere. Toward the end of last year, I did make that move to start taking on funded accounts. And at the moment, I have a 200k with FX2. I have a 200k with first class Forex funds. I have a 200k account with True Forex funds or the funded Forex or something like that. I have a 100k Darwin X account. What else do I have? I've got $100,000 FTMO there, thereabouts, 70k pounds, so $100,000 roughly. So I've taken on quite a lot of funded accounts in the past, even 6 months. And basically what I'm looking to do, especially with some of these more alternative firms, is get some trading experience, get a profit withdrawal, and then make a video for you guys to basically raise your attention to some of the other firms that are operating within the space. Because I think there are going to be, there will be another FTMO at some point, you know, a firm that becomes as good as FTMO. I'd like to be ahead of that curve and find them nice and early on, especially when a lot of them have easier rules to start off with. Get the account, get profits made, and then you have that for the long run. Now, last week I was down in Nottingham visiting some friends, visiting a friend's church over the weekend. And I was also on the Words of Wisdom podcast. So I met up with Riz at a studio he uses to do his podcast. We sat down for nearly 2 hours and we spoke all things trading, life, social media, drama. That's going to be up in a few weeks. I'm really, really looking forward to that. Now, last little update here is on the crypto side of things. Crypto, since the last video, has been doing exceptionally well. You may or may not know that around 60 to 70% of my net worth is actually in crypto, in various cryptos. You probably think that's insane. I think it's insane as well. I would never recommend this to anyone for any reason, but I kind of say, as I say to all my members, do as I say, not as I do. You know, I'm at a point in my life where things are pretty comfortable. You know, my monthly bills, rent for this apartment and stuff like that, car, whatever, isn't a ton, so I can be a little bit more risky than, you know, I would recommend other people to be, and that is certainly my approach with crypto. Currently 20% of my net worth is in the bank, so 20% is in cash, 15% is in trading accounts, to actually, you know, in live trading accounts with like Admiral Markets and stuff like that, and then the other 65% is in crypto. I'm not just invested in a couple of cryptos, I'm invested in about 15 or 20. And, you know, I have my profit targets and stuff like that I'm looking for over the next couple of years, over the next bull run. So that's the kind of game plan just now. I guess the last little thing would be the car. So a few of you asked in the last video, what car did you get? I actually got a Mercedes EQ, and it's like an AMG model. So it's an electric car. Why did I make the decision to go for an electric car? First of all, it's free to charge electric cars on the street in most places in Scotland. If it's not free, it's very, very cheap. And also as a business vehicle, there's great incentives to have an electric car as a business or a company car here in the UK as well. So hence, you know, we now have an electric car. But anyway, guys, I'm going to grab something to eat and then I'm going to get wrapped up to head to the gym. So the time's around about 4:30. I'm just sitting outside the gym and having some applied nutrition sort of pre-workout. I try not to have too much caffeine if I can avoid it, because it does give me headaches and that kind of stuff. But sometimes, especially if you're not feeling in the mood for a workout, having a pre-workout, especially if it has beta alanine in it, that just gets me in the mood. I don't really listen to music much in the gym. I'll usually listen to like a podcast or, you know, a book or something like that, and do a bit of learning at the same time. But if I have, you know, some pre-workout in my system, some creatine, I tend to get pretty into the workout. So I'm going to work out for the next maybe 45 minutes. I then need to go and pick up Neve from work. She works, you know, just in Glasgow. I'm about 5 minutes away from the city centre. And then this evening, I'm actually on a podcast with Austin Silver FX. I didn't know who that was. A lot of people recommended me to go on his podcast, and then he actually reached out to me and asked me to go on his podcast. So I'm looking forward to that this evening. That's in about 2.5 hours, so that'll be pretty good. I'll try and get a little bit of that on film as well. So with all that being said, I'm going to drink this and then head into the gym and smash this shoulders and arms workout. We're gonna make a cute baby. Mm-hmm. Okay. I just nearly ran that guy over. He just walked right in between. will drive me to the car.
Right, are you gonna say something?
Yeah, I probably will actually. So, I've now picked up wife. Hello, wife.
My husband.
So, we are just heading home. Probably going to make something to eat. And then I'm going to take Neve to the gym before going on the ASFX podcast this evening. Now, Neve, what do you think of the new car?
It's got heated seats, so I like it.
Yeah, but the last car had heated seats as well.
Yeah, but that car was silly.
What was silly about that?
Just very showy, wasn't it?
Was a little bit, yeah. More practical.
Practical.
Family car.
It's a family car. I work at Rocks, so if anyone is looking to purchase an engagement ring or some wedding bands or even a watch for yourself if you fancy,
I'll put
just
that
treating
in.
yours. Don't do
put it
that. You can contact me on neve.co.uk.
Shameless plug.
That wasn't shameless.
I'll actually put that in.
Don't do that. Please don't do that.
So anyway, heading home now. Catch up you when we arrive.
Goodbye.
I find it a bit like a cliche when people are on podcasts or interviews and they're like, yeah man, I was always going to be an entrepreneur because when I was 13 I was looking for ways to make money. Yeah, so was literally everybody in their, in their gran. Everybody when they're a teenager, before they can legally work, is looking for ways to make money. That's not why you're an entrepreneur,
So Sam, what I caught from that is you started listening to Andrew Tate at 13 and then you said...
Andrew Tate started listening to me at 13.
There it is, that's what it is.
Now that's pretty much going to wrap up things for this episode of Day in the Life. I had an awesome time on the ASFX podcast with Austin and James last night. It was really good to hang out with those guys and chat for a little bit, and I believe that podcast should be launching sometime in May, but stay tuned for that. If you do want to keep up with me on any other socials, Twitter, Instagram, etc., that will all be in the description below. And if you are interested in joining our Discord, whether free or paid, you can find links to that below as well, and links to our education too. Now, if you did enjoy this video and you want to see more content like this, please do drop a like and consider subscribing if you haven't already, and I'll catch you guys in the next one.